Hello students, welcome back. This is Mrs. Mercado speaking. In this particular lecture we are going to be covering chapter 2, which deals with budgeting. Budgeting is a complex matter. The problems are extensive. And basically, the budgeting process involves establishing plans, which includes the planning process, directing operations, and evaluating performance, which is a controlling factor. Okay, budgets are established to avoid human behavior problems. Okay, I used to work in a bank, and I used to be involved in the budgeting process. And we would take basically about 7 months to come up with our annual budgets. It was very labor intensive. It was a lot of revisions. It was a lot of communicating with other departments. The budget estimates received by the budget committees should be carefully studied, analyzed, revised, and integrated. In this particular text, we're going to be covering the static and the flexible budgets, which are two of the major budgeting approaches. And most of the times we use computers to be able to come up with budgets. Since a lot of revisions are done, we need to be able to have a lot of spreadsheets or softwares where we can make an adjustment, and that adjustment can flow into the rest of the budgets, because in budgeting, the information is basically compounded, or it affects multiple budgets. Okay, so we need to be able to create these budgets in these spreadsheets or these softwares so we can easily manipulate the data and make revisions as needed. Okay, so I'm going to go over a problem. The first problem that I'm going to be covering is exercise 22.2 of chapter 22. Okay, so let me start there. Remember, it is the student's responsibility to read the chapter before they attempt the problems. I am not going to cover the content. I'm just going to cover the problem-solving aspect of the lecture. Okay, so exercise 22.2 deals with flexible budgets for selling and admin expenses for a service company. Okay, so it says Digital Solution uses the flexible budgets that are based on the following data. They have sales commissions, which is 8% of your sales. We have advertising expense, which is 15% of sales. We have miscellaneous admin expenses. Now, it's very important here that we see that there's two types of costs associated with miscellaneous admin expenses. We have a fixed cost, which is $10,000 per month. That's fixed. It doesn't matter how much sales you have, you're going to pay $10,000 a month for miscellaneous admin expenses. On top of that, you're going to pay 4% of based on your sales amount. Okay, so as your sales increase, your miscellaneous admin expenses will increase by that 4%. So that $10,000 is a fixed component. The 4% is the variable component. Okay, we also have office salaries expense. That's $50,000 per month. That is a fixed cost. We have customer support expense, a fixed cost of $20,000 per month, and then we have a variable cost of 30,000 percent of your sales. And then we have research and development expense. We have a fixed cost of $75,000 per month. We are being asked to prepare a flexible selling and admin expense budget for October for sales volumes of $500,000, $750,000, and $1 million. So we're going to see how the different components impact our final total selling and admin expenses using the flexibility of having three different sales amounts. Okay, we have the 500,000, 750, and $1 million mark. Okay, so this is what a flexible budget kind of looks like. So we can get a better idea of what's going on, or what would happen if we had these sales. Okay, so we're going to start off with our total sales, and we have three different scenarios. We have the first scenario if we have sales of 500,000. The second scenario is if we have sales of 750,000. And the third scenario is if we have sales of $1 million. Okay, those are our three sales amounts that we're being provided here. Sales volumes of 500,000, 750, and $1 million. Okay, so we always start off with the name of the company. This is Digital Solutions Incorporated. We are preparing a flexible selling and admin expense budget for the month ending October the 31st. Okay, so we're going to start off with our variable components, or variable costs. Okay, these are the costs that vary according to the sales volume. Okay, so the first item that we have that's a variable cost is our sales commission. Okay, and that is variable. That's 8% of sales. Okay, So to calculate this, what we're going to do is we're going to get, and I'm going to first do the calculation in my calculator, then I'm just going to do them on Excel. I like using Excel because it just becomes easier to do your calculations, okay? So what we're going to do is we're going to get the 500,000 and we're going to multiply by the 8%. And that's going to give me $40,000. Okay. We're going to do the same thing for each of the sales volume. I'm going to get the 750,000 times my 8%, and that'll give me 60,000 for my 750,000 sales volume. And then I'm going to get my 1 million times my 8%. Okay, and that'll give me 80,000. Okay. The next variable cost that I have is advertising expense. It's 15% of your sales. Okay. And that's 15% of sales. Okay. So once again, I'm going to get my sales volume times my percentage, which is 15% in this case for your advertising expense. Okay. We're going to run the calculations. 750 times 15%. That gives me 112,500. And then we're going to get 1 million times my 15%. Okay. And that will give me 150,000. Okay. Now let's look at the next component. We have miscellaneous admin expense. Now for the miscellaneous admin expense, we have our fixed component, which is 10,000 per month, and we also have our variable component, which is 4% of sales. In this particular section, we're only going to include the variable component. Okay, so we're going to have miscellaneous admin expense, and that is 4% of sales. So we're going to get our sales volume times our 4%, and that'll give me 20,000. 750 times 4%, 30,000. 1 million times 4%, and that gives me 40,000. Okay, office salaries expense is a fixed cost, so that does not go into this category. Next, we have customer support expenses. We've got a fixed cost of 20,000 per month, and then we have a variable component, which is your 30% of sales. So in this section, we're only picking up our variable cost. So we have our customer support expenses, and that's 30%. 30% of sales. Okay, there we go. Okay, so we're going to get our sales volume times our 30. And we're going to do that for each of the sales volumes figure. We just multiply the sales volume times the percentage, which in this case is 30%. Okay, so $1 million times 30%. Okay, and then we're going to get our total variable cost. Okay, so to get our total variable cost, I'm going to add all of my variable cost, okay, which is your 40,000, your 75,000, your 20,000, and your 150,000. You add all those variable costs together, and you're going to get a total for each of the sales volumes, okay? So we've got a total of 285 for my 500,000 sales volume, 427,500 for my 750,000 sales volume, and 570,000 for my $1 million sales volume. So that completes our variable cost section. Now we're going to move on to our fixed cost section. Okay, these are the costs that do not change regardless of the sales volume you have. You can have low or high sales volume. These costs are fixed. Okay, so the first fixed cost that we have is miscellaneous admin expense. We have a fixed cost of $10,000. And that's going to be fixed regardless of your sales volume. So for each category, it will be $10,000. Okay. The next fixed cost component we have is office salaries expense. Okay. And my office salaries expense is $50,000 per month, regardless of your sales. So it's going to be $50,000 for each of the categories. Okay. Next we have customer support expense. Now, customer support expense has a fixed and variable component. My fixed component is $20,000 per month. So regardless of how much sales I have, I'm going to spend $20,000 on customer support expense. Okay. And the last item for fixed costs that I have is my research and development expense. And that cost is $75,000 per month, regardless of your sales figure. Okay. So now I've got all of my fixed costs. Now I can get my total fixed costs. So to do that, you just add all of those four costs that we have there. You're going to add the $10,000 for the miscellaneous admin expense, the $50,000 for the office salaries expense, the $20,000 for the customer support expense, and the $75,000 for the research and development expense. Okay? And that's going to be, since these are fixed costs, the fixed cost will be the same for all three sales volumes. Okay? Okay, now that we've got our total variable cost, and let me highlight this so we can kind of like see it, and we've got our total fixed cost over here. Okay, now I can get my total selling and admin expense. Okay, so what we're going to do is we're going to add my total variable cost plus my total fixed cost to get your total selling and admin expense. Okay, you're going to do that for each category. You're going to add your total variable cost plus your total fixed cost. Okay, total variable cost plus total fixed cost, and that is what we get. Okay, so now I've got my flexible selling and admin expense budget. I know that if I have sales of $500,000, I'm going to have total selling and admin expenses of $440,000. If I have sales of $750,000, I'm going to have total selling and admin expenses of $582,500. If I have sales of $1 million, I'm going to have total selling and admin expenses of $725,000 approximately. Okay, so that is our flexible selling and admin expense budget. Okay. First you do your variable cost, and then you do your fixed costs, and then you get the total of the two categories. Okay, so this is the first exercise that we're covering. This is exercise 22-2. Okay, and we'll be moving on to the next problem in a second. Okay, thank you.